Hello and welcome to Rocket Fuel, your daily update of everything that's happening in the Rocket Pool community. My name is Wack, today is October 11th and today's episode is going to cover the return of Anthony Sassano, which is really great. So he's going to have the daily GUI and I'll tell you all about that. We're also going to be talking about RPIP 63, getting closer to mainnet and some questions about Saturn 1 from Langers. On the Ethereum side, we're going to have a lot of coverage about app chains and layer 2s on Ethereum. And then we're going to have some more news about layer 2s and some comparisons between ETH and BTC and ETH and Sol. So let's have a look at all of that stuff.
10, 9, ignition sequence start, 6.
So we're going to start this episode with this news from Anthony Sassano. And here Sassano says, this is the announcement you've been waiting for. The Refuel will be back with a super duper ultra giga bullish episode on Monday the 14th of October. It's time to obliterate the bears. So we've been waiting for, I think, 10 weeks for the Daily GUI to come back. The Daily GUI, of course, is one of my favorite crypto podcasts. And as Anthony's been out, I have been covering some Ethereum content on Rocket Fuel. So you guys all can, get your content. You can stay up to date with your Ethereum news and your ETH news. And now, I won't have to do that anymore. So I was actually one of the first people to reply to this. And on the Daily GUI's general thread, I was like, woohoo, yes, amazing. And then I said, my watch has ended. So, I kind of brought this responsibility upon myself over the last 10 weeks to cover more Ethereum news. However, going forward, I'll only really be covering Rocket Pool news, some staking news, and some Ethereum news that has at least some kind of relationship to Rocket Pool or something that's really huge and can be related to Rocket Pool somehow. So, this is really exciting. Like I said, it's something that I've been missing for quite a while. So welcome back, Sassal, and really looking forward to Daily GUI returning. Okay, let's move on to some Rocket Pool news. And here we have some really good news from Langers, and he says the RPIP 63 hotfix, which is linked to the RPIP, is being prepared for launch once the PDAO vote concludes. So the PDAO vote is going to conclude in a couple of days, and right now I think it's like 80+%. Let's have a quick look actually, because we haven't had a look at the votes in a few days. I should have had this open already. So I think it was like 82 or 83% a couple of days ago in favor of RPIP 63 going through. Yeah, and it's currently is at 78% with 13% abstaining and 8% against. So a big abstain vote came from Val. Let me just change this so you can have a look. And Val says, I support the contents. I think the process could get some more work and then more at the post, so you can actually go and have a look. So yeah, between Val and Ramana abstaining against this vote, it was a big hit. So that is that's how that stands. And actually, let's have a look at the RPIP 62 vote while we're here as well. And that is now 78% in favor of ETH-only validators and removing the rewards. Removing the rewards cliff for RPL holders. There's 15% of people saying to have ETH-only validators, but don't remove the rewards cliff. And then only 6.25% of people are against both variants. And that's mostly made up with Ramana. And then the others, of course, here Val has put his big vote in, and Patches voted as well. So there's some big votes here, and it looks like that's going to go through. So yeah, these are going to finish on October 14th. So by the end of the weekend, they'll be done. But it's really exciting. So this is why, Langers has already started putting out this messaging. So he says the Sigma Prime audit report is public and can be found on our website. Then there's a link there. And it says it'll be available soon on the Sigma Prime's public repo as well, which is their GitHub. So you can go check it there as well if you want. And then Immunify has been instructed to update to the latest asset list to point to the hotfix code. So then there's information there as well. And that has not been done yet, but it will happen shortly. And the contracts have been packaged ready for deployment and verification by the community. And the Langers says at this stage, the aim is to raise the ODAO upgrade proposal early next week after the PDAO vote has concluded. So many thanks to everyone who has contributed to this release. So that's the next steps now, is that once the vote is finished, the RPIP 63 changes will go to the ODAO, which will take a week for that to go through. And then as soon as that goes, actually not just a week, it can happen as soon as a majority of the ODAO vote it in. So it doesn't necessarily have to be a week, but you need that quorum of at least, half plus one members of the ODAO voting it in. And as soon as that is done, then there'll be another change, and that will be the parameter change, which will have to go through the ODAO as well. So that will take another 7 days potentially, but it could be quicker if the ODAO members, vote it in faster, which I think they should. So everything looks ready to be live on October 28th, and that is really, really exciting. So, that is, of course, October 28th Australian time, which should be, you might get the changes happening at some point on that Sunday, the 27th, the evening in the US time, or kind of middle of the night in Europe. So hopefully we can have some kind of like live stream watch party or something as that goes live, just as a way of kind of celebrating. But I think it's going to be really, really awesome. I'm so excited for it. Okay, so even though we're working on RPIP 62 and RPIP 63, there's a whole lot of work going on with RPIP 49, and there is work happening with the Saturn upgrade. So here Langus has a message saying, hey everyone, this week the team held a Saturn workshop to break down the work and start planning out milestones. As we worked through the process, several questions arose that we'd like to open up for discussion. I've raised these on the forum for discussion there or in the tokenomics overall thread. So let's have a look at what the questions are. So here there is a post from Langas, and it's titled Core Team Saturn Workshop October 8th. So I presume that we'll be getting more messages like this in the coming days and weeks. And hopefully, the community will be kept up to date with everything that's going on, which is really exciting. So Langas says, hey everyone, this week the team held Saturn workshop to break down the work and start planning out milestones. He says, as we worked through the process, several questions arose that we'd like to open up for discussion. We've only begun to consider these issues, so some may be straightforward to resolve, but we'd like to get the community's input. And he says, happy to discuss here or in the tokenomics thread in the Discord. Either way, I will repost consensus here for posterity/visibility. So with RPIP 30, this is, I think I raised this issue before, so apologies, but it's good to get consensus anyway. It says the RPIP says unstaking RPL shall be defined as RPL that is locked within the protocol but not counted by the protocol for usage, and that's like an intermittent stage between staking and unstaking is actively staked, unstaking is that middle phase, and then unstaked is RPL that is just like liquid and out in the public. And Langasia says, since RPIP 30 applies to legacy RPL staking, does this exclude slashing usage? Slashing is still applicable to legacy mini pools in the event of Black Swan scenario where they lose more than 8 ETH level bonded. And while such an occurrence is unlikely, slashing is still part of the protocol for legacy mini pools. I don't see an issue either way, as they can only withdraw down to the withdrawal limit. However, it does allow for the possibility that a node operator could withdraw RPL beyond that limit before any slashing occurs. Either way, I wanted to make sure that we clarify expectations. And then he says, also, I assume that unstaking RPL is not counted for bonding for proposals and challenges. This may mean that they can unstake the RPL if it's bonded to a proposal or change. They cannot unstake it. With RPIP 33, it says, we noticed in the claim unclaimed node operator funds function specification, there is a last-ditch attempt at retrieving outstanding debt. It says, if debt exists, unclaimed node operator funds shall be used to pay off debt. It says, just bear in mind that at that point, if they have outstanding debt, they could block our ETH holders from receiving it by not calling that function. Obviously, in cases, there would also be blocking access to their own funds, but we raise it because other places attention has been given to ensure that node operators cannot block funds being returned to our ETH holders. Then with RPIP 58, there's the MEV penalty guardrail, and Langa says we're raising early that there may be implementation limitation to enforcing exactly 50,400 slots. It's likely that we'll have to use a close approximation. Not sure Kane is happy to discuss this further. And then RPIP 46, universal variable revenue split, so voter share timing. So here Langa says, we are very early in thinking about this, so bear with us, but we see a potential timing issue with voter share. Essentially all ETH rewards, consensus, and non-smoothing pool execution layer rewards go to the megapool contract, which is then divided up into shares on node operator distribution. This includes voter share, which will most likely be sent to a pool contract on distribution and then dispersed by the rewards tree gem process. the voter share ETH will flow at the timing will of the node operators and not a regular cadence. So what that would mean is, and this is me adding that, would be that, the person could just sit on their rewards and then it wouldn't get distributed the way it's supposed to. So people who are owed rewards might not get them like they want. And then there's allow list controller, commission controller address. And then there's some information there as well about there's no specific safeguards on this power except that our ETH commission is less than 100%. So for the PDAO, that might be okay, but for a single address or committee, that's a great deal of power. And we want to apply safeguards to this, even if the PDAO trusts that address is more unchecked power than we have afforded other roles in Saturn. And then there's the deposit mechanics. There's stuff about the scrub period and deposit action required. So you can have a look at that. There have been no replies on the forum, but that is fine because the usual suspects have replied in the governance thread. So the first person to reply was Epinef, saying, so I'm not sure how to get a good gauge of community sentiment without a poll, but here are my brief 2 cents. He says RPIP 30 unstaking is still at stake and should be available for slashing and use cases for protocol security, but not uses that benefit the staker. I don't think the optimal is that RPL can be put into unstaking after a bond is put up and still forfeitable, but cannot be put into a new BY, the staker, after it is unstaking. And then for RPIP 43 says no preference. RPIP 58 says reasonable and acting as close as possible with a difference imperceptible to a normal person. And then it said normal vote share timing. It says yes, if I understand, I think there's a downside, even though it evens out in the long run. RETH has a problem with potential APR shifts, and smoothing pool also has uncertainty outside the control of the node operator. I don't think there's really any way to fix it, though with mega pools forcing distribution of rewards, 1 ETH, 8 ETH will come 100 times sooner for large node operators. Overall, I think we acknowledge some small variations within staking time and relatively thin liquidity. It is unlikely there'll be a way to game this. And then with the allow list control, it says I don't think there's much of a problem. And then there's more information there as well. And then Noshwa replied as well and saying that I don't think for RPIP 30, don't think the spec defines whether or not unstaking RPL should be used for slashing. And it says while correlating slashing above 8 ETH is unlikely, given that's happening, it's quite likely that impact will be above 11.6 ETH, and unstaking would allow avoiding the RPL penalty. He says, so I think that using unstaking RPL for slashing is within the RPIP and makes sense. With RPIP 43, Noshua actually gives quite a big answer, so I'll let you read that. And with RPIP 58, he says close approximation doesn't sound like it will affect functionality at all, so it's fine. Mostly our curiosity was the issue cane. And then for RPIP 46, he says voter share timing, agree that is how it would work. I don't see it as an issue. Keep in mind that reward distribution is permissionless, so at least for large mega pools where distributing or not would actually have significant impact on voter share for a period, it seems reasonable that people would choose to distribute. So yeah, that could get distributed by others if they wanted. And then the goal with the allow list was automation in the form of smart contracts. I don't think we want to give this to individuals on multi-sigs. And then with RPIP 59, the scrub period, he says using state proofs instead of scrub periods is great, not essential to the tokenomics rework. And then deposit action required, yep, good catch. And then Val had his thoughts as well. With RPIP 30, I think unstaking should be slashable. With RPIP 43, says it might be worth a note, but I don't think dev work is necessary to handle it differently. With RPIP 58, it says fair enough. Agree the exact timing here isn't critical. With RPIP 46, Val again says, is this problematic? Essentially means that voter share revenue from June isn't directly based on validator revenue from June, but in aggregate, the right amount of revenue is getting back to all the validators and the folks within voter share. And then for RPIP 46, there's controller address, and the premise is that, this would be a contract. RPIP 59 scrub, it says okay, this hits the intent very well. It would require change to text, but that's where we left that type of flexibility. With RPIP 59 deposit, it says borderline clarification. I agree, it might be better to say something like to start validated 3 actions are needed: deposit node operator only, assigning permissionless, and stake node operator only. And then Kane says it's not an issue anymore. I didn't think of the correct way to implement it initially, but we can make it work exactly as specified. So Kane fixed that issue. So good guy Kane. But yeah, there's a lot of discussion that's still going on, and I'm really heartened to see that the team are kind of asking these questions really openly, publicly, in a really clear way, and people from the community are responding to those and giving their feedback, and it seems like everyone is kind of on the same page. And Saturn 1 work is developing a speed, which is really awesome to see. Like, I'm really hoping that, we get this out as soon as possible, but as safely as possible, because it's such a big change. But I really think it's going to be like a huge step forward for Rocket Pool. So I'm so excited about getting it as soon as possible. Okay, and talking about the team here, that yesterday on Thursday night, the GMC had its bi-weekly call with the team, and there was a whole lot talked about here. So the meeting notes are here, but we can have a look at them. So the first thing was the Alpha Growth meeting notes. So Schifrin and myself met up with people from Alpha Growth to kind of set expectations for the grant. We're paying them $60,000, and then Schifrin kind of brought up some of our ideas or concerns, and so we had a really good discussion about all of that stuff. And these are some of the notes from that part of the call. So I said we need to use the trial period, which is the first 4 months, to see if we want to renew it and go forward, to evaluate whether the commission structure and the return on investment goals are sustainable for the future. We'll dive deeper into this with the team tomorrow and inquire about their past experience negotiating similar deals. So it says, while Alpha Growth is open to publishing weekly reports to Discord, they're cautious about sharing too much information publicly to avoid jeopardizing potential deals. The GMC is clarifying with Grant and Mav if there are any specific no-go areas or red flags to avoid in these partnerships. During tomorrow's call, we'll focus on ensuring the smooth collaboration between Alpha Growth, Grant, and Mav. And EPNF highlighted that anything under 7% return on investment is not viable. Oh wait, sorry, I'm reading the town hall meeting notes. I'm sorry. So here the town hall meeting notes, not the. This was published. Hold on a second. Actually, that's my bad. So it seems like the notes for the team call are not public. So sorry about that. You got me reading the town hall notes again. But yeah, those are not public, so I can't really share those with you. But it was a very, very, very good call. And there was a lot of really good information shared in that call. And I left the call feeling very excited for everything. So yeah, I'm sorry about that. I should have checked that a little bit. I just got a little bit excited about it and I didn't look closely enough. That's my bad. But yeah, that's actually a private thing, so I can't share that with you all. So sorry about that. See, we've got elections for the GMC coming up. So if you want access to really good GMC information, you should really run for the GMC and put your name forward for it, because we get some really good pieces of news before the rest of the community does. And it's oftentimes totally worth it just for that. And you get paid. So yeah, this just become a shill for running for the GMC. Okay, Jasper yesterday took part in a conversation with M-Team about staking, home staking, and solo staking, and I was able to listen to the first 45 minutes of this, and that was because I had to leave because the team call was starting with the GMC. But what I listened to was actually really good. So gave this a listen. It's an hour and 15 minutes long. And the parts I listened to, they were talking about home staking, the difference between home staking and solo staking, and MEV, and a whole bunch of other things. But then they were going to get to some of the drama stuff after I left, like talking about Max Resnick and his ideas for Ethereum, etc. So people here like, Andres had said, like, awesome talk, goes to show how much more productive and positive these discussions are outside of Twitter replies and quotes. And M-Team said, thank you for your time, Jasper. I hope to follow up before 2026. And Jasper said, this was an epic conversation. Definitely check it out. Thanks for hosting. So yeah, if you are interested in listening to that, definitely go and give it a listen. Okay, moving on to some staking news now, and this is news from Lido. And Dimi here, who's the lead dev on CSM, actually is changing some timelines for the CSM launch. And he says CSM has never been that close to mainnet. Maybe you'll see even before Saturn 0. So I think they know that the date for Saturn 0, of course, is October 28th. It's most likely that will be the date, although there's a small chance it might change. But Lido, I was going forward with the idea that they were going to launch on November 1st. and because when I talked to Dimi, they were still working on some documentation stuff. They were still like doing small bits of this and that governance stuff and other things. But it looks like that stuff is all done. And they're actually going to try to get to the finish line before Rocket Pool launches Saturn 0. I replied to Dimi saying, there's no need to rush the mainnet. Take your time, perfect your documents, do another round of testing, tweak your front end a bit. And Dimi replied with laughing emojis. But Dimi actually came into the Rocket Pool Discord today and had a really nice conversation with Val, and they were quite friendly with each other. And Val kind of said to him that, look, if it wasn't for CSM, Rocket Pool wouldn't be on the Saturn roadmap that we are right now. And a lot of, everything that happened basically that got us onto the Saturn path was as a direct result of Lido going this CSM route and basically changing the game for Rocket Pool. So there's some mutual respect there. Like Dimi, I think he's a cool guy. It's just a shame that he works for Lido, and a shame that his hair's not always blue, just sometimes blue. But yeah, he's a nice guy. So it's actually going to be a huge achievement for them for actually hitting their timelines and their milestones. So congrats to them. But yeah, Rocket Pool is right on their tail, and I'm hoping that we get there before them. But I think they're going to push things out a little bit earlier, maybe. Okay, moving on to some Ethereum news now. And the big news on Ethereum today is the fallout from, well, not fallout from, but discussion around the Uni chain that we talked about in yesterday's episode. So there were a whole lot of takes. So I think it might be interesting to go through some of them and kind of just compare and contrast different people's understanding of what the app chain thesis might look like and how this is all going to work. So we're going to start here with DC Investor saying, look, I don't know, but if hundreds or thousands of well-used L2s and app chains launch on Ethereum, and the one thing they can do is permissionally use ETH as a decentralized censorship-resistant asset, I think that's hella long-term bullish. I will die or go broke on this hill. And then there was other discussions kind of coming up with fee revenue generation and value accrual and all that kind of stuff. But we're going to get to that. So here Cloudred says L2s are a threat to ETH. They're kind of quoting this, FUD kind of perspective. And then Cloudred says, sure, then sell all your ETH for an L2 token, but you won't do that. Everyone would rather hold ETH. Even the L2s would rather hold ETH. Enough said. And then John actually replied by saying, no, I'd actually rather hold OP. Optimism achieved critical mass of big chains, so it's now the default rollup framework, and that isn't going to go away. The OP treasury earns a small cut of every transaction fee. Literally only 3 VCs, and 2 of them are A16Z and Paradigm, who know how to hold and won't dump on me. So there's some contrasting opinions there as well. Here, David says, my hottest take is that I can't possibly believe it's actually a hot take, is that L2's turning ETH into the currency for their entire ecosystem to enable transactions is that never could have happened before, is, believe it or not, positive for ETH. So this is a really interesting idea, is that we know that the L1 has limitations of what you can and can't do on there, with the EVM environment and with the time to finality or just the block time as well. There's some things that you can't do on Ethereum layer 1. And then so David's saying, look, just because we can't do that stuff on ETH layer 1 doesn't mean that Ethereum users don't want to do that stuff. So L2s are a really good place for that to happen. And if this is happening on L2s that are using blobs for their data availability, and they are using ETH as their gas fees and their base pairs on their on that L2, for example, the main liquidity being, for example, ARB, OP, and then ARB ETH or OP ETH or ZK ETH, whatever, all of those things together, they're all using ETH as their base, and that is what is positive for Ethereum and ETH in long term. Here, Carbon says it's a terrible user experience to have to keep funds on 20 different L2s. There really has to be a single liquidity layer from which an account can access any L2 seamlessly, and don't show me on some random shit nobody uses. It needs to be at the base layer. So this is actually a really interesting idea, because it really does seem like there's going to be a few super chains that kind of get their act together first. And, we talked about the OP superchain yesterday, but of course there's ZK Elastic, the Arbitrum Orbit stuff, and Polygon's Aglair, and I think Starkware are doing their own thing as well. So it seems like there's going to be 4 or 5 of these big superchains with a whole lot of other L2s kind of built in within that. And I think that, OP have taken a lead just with the chains that they've been able to get onto their platform, into their stack. But with ZK, it looks like their Elastic chain might actually be the first to launch and go live on mainnet. So it could be that, they might take a lead, with people kind of using that. So that's going to be something really interesting to see. But here there were some interesting comments in reply to Carbon. If you want to follow those, you can have a look. And then Liam here actually had an interesting thought about the cross-ecosystem interoperability, saying cross-ecosystem roll-up interoperability isn't going to happen overnight. However, what we can have is interoperability within different L2 ecosystems as a short-term compromise to improve current user experience constraints. We aren't building a walled garden, we're knocking it down. So this is really cool. And here there was questions about unification of liquidity between the different L2 ecosystems and how will it take a long time to make it happen, referring to interoperability between the OP stack, Elastic Chain, Aglair, Arbitrum ecosystem, etc. And they said, yes, unifying the separate L2 ecosystems is a great long-term goal. As I said, interoperability within the individual ecosystems is better than each individual chain being completely sovereign. The best thing we can do to improve UX over the short term. And none of this, of course, is even talking about, base rollups that will change the game potentially completely. So that is going to be an incredibly interesting development as well, and the one that we're definitely paying a lot of attention to. Here there was an interesting conversation that came up between Lefteris and Alex. So Alex, of course, works with ZK, but with Matter Labs. Yeah, that's right. Lefteris says, what's the long-term solution vision to Ethereum L2 liquidity fragmentation? And Alex replied by saying, L2s will get aggregated in a few clusters, such as ZK Sync's Elastic Chain or OP Superchain. Clusters will provide seamless interoperability within them with one-click user experience and without tax on capital movements. And then ZK clusters will have a cool advantage because they don't need to force all chains into mandated uniformity of shared sequencing. This means that the app chains have freedom to actually customize and offer unique differentiations. Chains don't depend on each other's security, while the ZK cluster can continue scaling horizontally without any bounds. That's perfect elasticity. And then Lefteris says, thanks, Alex. And the various clusters between them would aggregate how? Same as we do today. He says, I've heard about Elastic Chain and know that the superchain idea, but still not sure the exact way that all these different chains will achieve this seamless interoperability in their cluster. So then Alex replied by saying, for ZK, all assets will be shared, will be stored on the shared bridge on the L1. The root hashes of all chains will be placed on several Merkle trees. Its root hash is published on the shared bridge. Every chain must provide a validity proof of the new block to update its state in the tree. In this construction, all chains have provable read access to the state of all of the chains. Since all chains use the same core circuits and system smart contracts, they have a guarantee that all updates of the state happen correctly, which in turn means that the system contractor of one chain can trust system contractor of any other chain, which allows us to mint and burn tokens natively. This minting and burning doesn't require moving funds on L1, only the root hash commitment of the shared Merkle tree is updated. This design requires low latency ZK proofs, which is realistic for small blocks. It says for OP, chains give up autonomy and plug into a single shared sequencer. They must trust the sequencer not to reorg in the last 7 days of blocks. And of course, you have to remember that Alex is, part of ZK Sync. So he's obviously going to talk up the ZK part of it and talk down the optimistic part of it. But that's, fine. You just have to understand that might be, that might cause some of the wording that he used there. And this is how will it work between chains and between the clusters. So Alex is roughly the same way as between different rollups. You can move funds via L1 trustlessly, or you can trust bridges and pay them a capital tax. The idea is to create an enshrined shared bridge in L1 itself, which would interconnect the clusters out there. And there's an effort to work towards it, but realistically it's several years away, as everything that involves significant changes in L1. So this is actually really, really interesting, because I think we're going to get there in steps, right? So for there to be one whole giant Ethereum and it going back to feeling like, one monolithic blockchain, Alex is saying that's going to be a few years away. However, if you don't mind smaller, like huge, but like silos of L2s kind of like working together, then within those environments, it'll be very, very easy to use, and you'll have that interoperability right there. Of course, there will be a level of fragmentation when you consider all the different L2s out there and all the different clusters, but they'll all be linked to layer 1, so you can always go back through layer 1. Now, base rollups will change that a little bit with the way that they put their proofs on layer 1 and how that works, but I still need to learn a little bit more about how they will work and how they might make it better. But it looks like we're seeing a path now through the trees, and the big FUD that we had over the last 6 months basically, since the Denkun hard fork of Ethereum Ethereum's fragmented liquidity, it looks like we're going to start seeing developments towards fixing that very soon, and then potentially in a few years it might be a non-issue overall. And the great thing is, right, that in the process we'll have gained unlimited scalability, pretty much, absolutely vast amounts of block space that could bring the whole world on chain and be cheap enough for everyone in the world to use and still cost fractions of a penny in transaction costs. So that's the goal, and that's what I'm really excited about. But that path will potentially be a few years, but in getting there, I think it's going to be really good. And then here, anti-prosynthesis actually has a narrative violation saying the general purpose L2s that truly wins is the one that gets its technology enshrined brandlessly into Ethereum. The overarching goal is, after all, to scale Ethereum, not launch a bunch of new brands, ecosystems, gimmicks that no one cares about in earnest. So I think that's a really interesting take, and that's I kind of agree with that, which is why I was just saying, right, at the end, we just want there to be Ethereum, and we don't necessarily care about Arbitrum, ZK Syncs, Optimisms, Starkwares, any of these things. We want Ethereum, right? And once we get to that point where there's just Ethereum, that's the end goal, and I think that's what we should all be working towards. Okay, so talking about L2s, there's a chance that we might be getting another L2 coming onto the market quite soon. I'm sure we're going to get many others along the way, but this one's something that I'm looking out for, and it's something that I've hypothesized on Rocket Fuel before. And here, solid intel are saying Fidelity is planning to create its first fund that will trade on a blockchain, and this, there's a chance that this doesn't go to Ethereum because we don't know where it's going to go yet, but I'm pretty sure that this will end up settling to Ethereum, and then I'm pretty sure that within a few years Fidelity will have their own layer 2, and they'll be bringing more of their funds on there and having more of their activities on chain. But this is a step towards that. So we know that BlackRock have done this, we know that Franklin Templeton have done this, we know that others are doing this as well, and it just makes sense for them to put it on Ethereum, and I think that's what they're going to end up doing. So I think that's going to be really cool to see. Okay, next we got this really, really great post from Adriano talking about comparing ETH and BTC. And I really liked it. Sometimes I really like this post because sometimes it's a really good idea to just understand, what people are thinking and how they're kind of comparing different assets. And right, so the first thing that Adriano starts off with is talking about how Bitcoin has its proof of work, and that requires selling, and there's a structural selling that happens within there to the tune of $800 million a month. He says, the Ethereum side, there's no such structured selling that needs to come. Maybe there's some selling that happens to happen for tax purposes, for income, but otherwise there's no structured selling in the same way. And then he talks about Ethereum dominating in terms of network revenue, and Bitcoin just doesn't have that. And Ethereum's had some ups and downs, but it's vastly outperformed Bitcoin's revenue. Then he talks about Ethereum's shift to proof of stake and how that makes it much more ESG compliant if people are still interested in that, which it seems like it's kind of growing out of fashion right now. And how Bitcoin is still growing taking on more and more energy like every day because of miner competition. And then it says that the hard cap of 21 million, just because Bitcoiners say that that's the hard cap and that's what they want, doesn't mean that it's actually going to be a hard cap. And if the network security is compromised in the future because the mining reward is going to be so small, then what will happen is that that number is going to change basically, and it's just a social consensus number. And then he says that, financial analysts like Eric Balchunas and James Seyfarth have a responsibility to let investors know about these details, but they often don't. And that, Bitcoin's network is subsidized by issuance basically. So if you don't keep, if you don't look at the 21 million number, what you'd realize is that every day Bitcoin is inflating, and that's a real thing that's happening, and that's going to keep inflating for another 100 years basically, up to 2140. And that amount that it's inflating by is going to get less and less, but it's still going to be inflating. So yeah. And then and then they're talking about like a different parties and like how they can how they should be paying attention to these. So I'll just read the summary here. So Adriano says proof of stake has allowed Ethereum to eliminate most structured selling, create native yield for long-term holders, tackle ESG concerns about energy consumption, all without compromising its censorship resistance, as evidenced by the failed OFAC censorship attempt. These advancements position Ethereum not just as a strong and forward-thinking network, but as a global financial platform capable of hosting a wide range of decentralized applications and services. Think of Bitcoin as a single application, digital gold, while Ethereum is like an entire operating system that not only supports various applications, but also excels at the very function Bitcoin was designed for. And since given all this, you could argue that ETH is objectively and verifiably a better store of value, even if it's not always marketed that way. It's important for investors and analysts to move past oversimplified narratives and dig deeper into the complexities of these cryptocurrencies. Understanding the nuances of Bitcoin and Ethereum's monetary policies, consensus mechanism, and real-world resilience is key to making smart investment decisions in the fast-changing crypto landscape. So let's get this conversation started. Tag your favorite mainstream media outlets and analysts to bring more attention to this important discussion. So that's really cool, and I'm bringing it to a slightly wider contribution audience, so hopefully more people see this tweet. Okay, here we had actually another interesting take, and this was from Michael, and Michael was here comparing Ethereum and Solana and Eth and Sol. So he says Solana is valued at 23% of Ethereum's market cap, 28% fully diluted. The question I've been asking myself is whether or not the market is pricing this appropriately given Solana's growth over the last year. So he says comparing the two networks and 5 key valuation criteria with data from Artemis. So this is price per DEX volume in the last 30 days. Solana actually wins out on that. With the price to TVL, Ethereum wins out on that. With the price to stablecoin market cap, Ethereum wins out on that. Price to fees, Ethereum wins out on that. And cost to produce $1 of fee revenue, Ethereum wins out on that as well. So the takeaways are that Ethereum leads on 4 and 5 key metrics. Solana leads on arguably, and this is the person's like bias showing, I think, arguably the most important metric, price to DEX volume. Pricing seems fair on a relative basis today, not factoring in Solana's potential growth. Solana is growing faster than Ethereum, and 66% of its users in Q3 were new users. I think there's other evidence showing that is mostly bots. Like a huge amount of the users actually have 0 Sol in their wallets. So the new user number can be easily manipulated quite a lot. As Solana continues to take a large share of new users coming into crypto, it's reasonable to conclude that the valuation could be mispriced on a relative basis. It says, if anything, Solana is forcing Ethereum to keep innovating. Competition is healthy. I actually agree with that. Just the fact that it's the Make Ethereum Great Again camp, they are, I think, in part inspired by some of the stuff that's coming out of Solana and the developments there, their monolithic blockchain design and like their fast blocks, fast finality, cheap transaction fees, and they're wanting to bring that to Ethereum as well. So that's definitely true that Ethereum is innovating in some ways because of Solana. And then, what do you think? And I really like this reply by Antiprothesis saying, growing small numbers is easy. Look at absolute values as well. Also compare major L2s as well as other L1s. It becomes obvious quite quickly just how insanely overvalued Sol at 1/4 of Ethereum really is, or 1/4 of ETH really is. So, that's a really interesting like perspective as well, that I thought I'd kind of compare ETH to, well, share these comparisons of ETH with BTC and Sol and let you all figure out what's going on there. Okay, and next we have this news of TD Bank that's facing a $3 billion fine for money laundering probe. So what happened is that these guys looked the other way for many years for activities that were happening in their balance sheets, and they allowed a lot of money laundering to happen, and they are now having to pay a fine for $3 billion, which is an astronomical amount. I think it's one of the largest fines ever in banking. Ryan Sean Adams here, the host of Bankless, says, covering this New York Times article, saying TD Bank pleads guilty and pays $3 billion to settle money laundering case. Authorities cited joking by bank employees about crimes. You guys really need to shut this down, lol. And then Ryan Sean Adams says they're trying to put Roman Storm in jail for something the banks do every single day. Amin has a take here that's interesting, kind of developing on that, saying Storm didn't even do this. He published general purpose on-chain privacy software and made it freely available, and someone else did this using that software. This all sounds like hyperbole, but in the reality, the US Department of Justice has made more on him to have gone ahead with an indictment, but his actions insofar as he being held criminally culpable for the money laundering that occurred using Tornado Cash Protocol are all related to him publishing code or getting venture capital funding and advertising revenue for said publishing. The indictment is blatant assault on the First Amendment, and Ryan Sean Adams says sadly true. So yeah, a lot of people in crypto have been kind of like pointing out that the banks are doing things way worse than crypto is, but crypto seems to get the brunt of the criticisms, which is not fair compared to the amounts that the banks are doing on a global scale. And finally, I'm going to end with this funny thing slash horrific thing that Lido came up with in the Discord yesterday, and this was a mixture of the kek emoji and the like and subscribe emoji that was created with my face, and kind of those two images were merged together to make this new emoji that's, yeah, what you can see on the screen. I don't know how to describe it. It's a Sneaky Ninja guy says it looks like a mariachi singer. Jasper says he wants it as a bobblehead. I said, what did you guys do? But anyway, this Huludo was saying that it should be tagged as CAC and made into a new emoji on the network. I actually replied to Thomas saying, wouldn't KEQ be better than KAQ? And he says, yeah, you're right. So then now this is another emoji on the Rocket Pool Discord. So I think my face is on like 4 or 5 of them now. So yeah, I spend way too much time in this Discord. But anyway, on that note, I'm going to end the episode, but thank you all for watching, listening, and being part of the Rocket Fuel community. I hope you all have a lovely weekend ahead. Here's hoping that things stay positive and the excitement that's kind of bubbling in the Rocket Fuel community keeps going. But I'll see you all on Monday. Bye.